Listen-only mode.
Thank you for joining the Financial Brokerage webinar today, Marketing to Business Owners with Brian Lysing, Financial Brokerage. This session will begin in 3 minutes. Thank you for joining the Financial Brokerage webinar today on Marketing to Business Owners with Brian Lysing of Financial Brokerage. The session will begin in 2 minutes. Thank you for joining the Financial Brokerage webinar today on Marketing to Business Owners with Brian Lysing of Financial Brokerage. The session will begin in 1 minute. Thank you for joining the Financial Brokerage webinar today on Marketing to Business Owners with Brian Lysing, Financial Brokerage. The session is about to begin. There will be a question and answer period at the end of the webinar. All questions must be typed. This can be done at the bottom of the control panel on your screen. Welcome, Brian.
Hey, thank you very much, Justin. Appreciate your introduction again this month here. Welcome all of you to the November webinar on Marketing to Business Owners. Thank you all for taking time to join us. I'm going to keep this quick, probably about 20 minutes or so that we can get on with our day and do what makes us money, which is getting in front of people. But I did want to bring to everybody's attention 3 new tools that can help you in marketing to business owners and ultimately writing large life insurance policies. These are tools that are very useful. They make this market very, very easy. Beauty of it is you really don't have to know a lot to these tools. It can really help you out and make life easier for you. So what we'll be speaking about, the 3 new tools that are out there. We've got a couple tools available to help properly value a business. You'd be surprised how many business owners have not completed a proper valuation. always leads to all sorts of problems when it comes down to buy-sell arrangements or even estate planning if they haven't done that correctly. We'll discuss the S.O.L.A.R plan. This is a new take on an old type of product from ING. We'll discuss how that's different from the old-fashioned non-qualified deferred comp and why. We'll also discuss ANICO's expertise. ANICO is the acronym for American National, one of our 20 life insurance carriers here. If you don't know what they can do for you regarding pension plans and retirement plans, it's a great time to get started and utilize their expertise. Each section I'm going to start with a short discussion on some questions that you can ask any business owner to get the conversation started. These tools are great, but you know what, if you don't have an opportunity to use them, it's not going to do you any good. So we'll start off with tools to value the business and some questions to get the conversation started. I'm going to confess I stole this question from one of our producers about 50 miles down the road from us. He presented this at an inner circle meeting, and he told us that one of the things he asked business owners is simply, what's your exit strategy? How do you plan on getting out of the business? And that makes a lot of sense. People do a lot of work formulating a business plan, figuring out how they're going to get things started. Those plans can be very elaborate. They also have a plan for running their business from day to day. They know what they're going to be doing. But how many business owners have really planned out how they're going to get out of that business? Are they going to work at it till the day they die? They might tell you yes. Their spouse might give you a different answer. So they need a strategy to get out of that business. What happens if they pass away? What's going to happen to the business? How is their family going to get the income out of that? What if they decide to retire? Do they want to sell the business to somebody else while they're living, or again, maybe while they pass away? Well, they need to explore the tax implications of any of those options. Are their heirs going to receive a fair price? What is the business worth? That's really the first step. You need to decide what is this business worth, and all those other things will then fall into place. So here's an interesting statistic. Most business owners misvalue their business by the value of their business by nearly 60%. This is a stat that came to us from SPARdata.com. It's an outfit that all they do is value businesses. That's their business. And they always ask a business owner before they start the valuation process, what do you think your business is worth? And they found that the owners will be off on average 60%. This could be higher. This could be lower. Now imagine if you're doing buy-sell planning or even estate planning, and you're using figures that are wrong by 60%. Somebody is not going to get a good deal. Someone's paying too much or not getting enough for that business, or the IRS may come in and say, by the way, you owe a lot more taxes for the estate tax than what you were expecting. So how can you help a business owner value their business properly? Well, the traditional way may be to use their own accountant. The accountant may or may not be an expert in business valuation. The accountant may want to charge extra for doing that. And the accountant may say, oh, no, we don't need to do this. Well, we'll just use a number. So you don't know what you're getting. The client may be comfortable with that, but is that really accurate? It might be, it might not be. So a couple new tools that can help. We have a questionnaire on iPipeline. That's our term quoting system, and I'll show you where to find that on our website. That's something you can use and get into. We also have a new website available to us. This is brought to us by Transamerica, and it's spardata.com. So the iPipeline questionnaire, this is something you can use immediately. If the client doesn't want to pay money to have a valuation completed, maybe you want to get them in the ballpark, it's something you can use today. I'm sure you're all familiar with their website, fb-inc.com. I've highlighted where you can find this. The red arrow at the top, you'll see points to quotes. That should be familiar. And then once you're there, I've got the other red arrow pointing to term quotes. That's the iPipeline engine. And you'll see it here. At least I hope you can see it up at the top in that orange bar. It says, determine what your client's business is worth. Try it out. And you want to click right on that try it out point right there. Again, this kind of fades in the background. Most folks have not seen that this exists. And once you click there, this is what you're going to see. This is from iValuate. You can start plugging in the information, and this is going to take you through a multi-page questionnaire. And at the end, it's going to give you a evaluation of the business. So if you brought your laptop into the appointment or had the business owner visit you, you could sit down and do this with them and have a great idea what that business is really worth. Now, alternatively, Transamerica has paired up with and brought to our attention this company I mentioned earlier, S.O.L.A.R Data. And all they do is value businesses. And this is available to all producers that are contracted through Transamerica. And it's pretty easy. Go to SPARdata.com. And what you want to start out with, though, is that free rule of thumb report. I've got the red arrow pointing right to it there. You can click there, and it's going to bring up, I think, about 650 different reports. Now, you can sort by the type of business that you happen to be working with. Maybe it's a hairstylist. Maybe it's a brewery. It's a restaurant. It's a machine shop. You name it, it's out there, and you can get it's about a 25-page report on just a generic business in that industry. And that's going to be your starting point. And what you want to do then is share that report with the business owner you're working with so they can have some idea what their business might look like. Now, S.O.L.A.R Data has collected a lot of data on these, and I can give you numbers. It's a lot like prospecting numbers. If you remember that, your first week in the business, if you make 10 calls, you're going to get this many contacts and appointments and all that. So what S.O.L.A.R Data has found is that if you share this rule of thumb report with 10 business owners, 7 of them are going to agree to the free consultation call. Now, this is a free call from S.O.L.A.R Data. These guys are experts at this. If you're working with someone who has been reluctant to have a proper evaluation done, S.O.L.A.R Data experiences a 64% success rate in getting these folks to move and agree to have evaluation done. So share the rule of thumb report with 10 business owners. 7 of these are going to agree to take that call. Now, 5 of those 7, after that call, S.O.L.A.R Data does a great job. They're going to agree to pay for a formal evaluation to be completed. So now we got 5 folks having that formal evaluation. They say 4 of those 5 will buy a life insurance policy from you. And this is going to be to help with a buy-sell agreement to fund that. And it will also be very useful with estate planning. If that business is worth a lot, they're going to need to do some estate planning and probably get a life insurance policy to help with that. S.O.L.A.R Data charges the business owner a fee. They also pay a little finder's fee to the agent. So even if you don't get any life insurance business off of that, there is a finder's fee that's going to go to you. So keep in mind, if you have any questions, you can always type them into the question box here. I'll get to them at the end of the webinar. I'm going to move to the second portion right now, and this is the S.O.L.A.R plan. This comes to us from ING. And it's really a new take on non-qualified deferred compensation, a special benefit for key employees. And not everybody has key employees, but for those that do, you can start the conversation simply by asking, have you heard about the new type of retirement plan that's available for your key employees? Or do you have a retirement plan that you don't have to provide to everyone? Does your plan allow you to discriminate? Find out what type of plan they have now. When was the last time they reviewed that plan? They may have a non-qualified deferred comp already in place. If they haven't reviewed it recently, they don't know about some of the new tools that are available to help them. So what is the S.O.L.A.R plan? What does it stand for? Well, it stands for Self-Owned Life and Retirement Insurance Arrangement. I would call it S.O.L.A.R too. And I already mentioned it's a new style of deferred comp. They came up with this due to some new legislation that involves non-qualified deferred comp plans, and also the changing economy has changed the way people look at those. And best thing about this, I really like this, this arrangement makes taxes, income taxes, seem to disappear. They don't really disappear, but it will seem like that to a lot of folks. And I've got a comparison of how a non-qualified deferred comp and the S.O.L.A.R plans match up against one another. but just to give everybody a little background here, non-qualified deferred comp, the way those plans work, the employer has an agreement with the key employee and sets aside money into a fund every year to fund this agreement. They're going to hold off until some checkpoint has been reached. Maybe the employee retires, or maybe they're there 20 years. Whatever you set it to be, the employee is not going to get that benefit until that event has happened. So meanwhile, the employer sets aside the money in an account. Maybe it's inside of a life insurance policy. The employer gets no tax deduction right now for that. That money grows. The employer really doesn't have access to that money to help with the business while that's happening. So there are funds that really aren't helping anybody at that point in time. Once that event has happened, then the benefit can go to that key employee. The employee pays tax on that at that point, and that's when the employer gets the deduction. Now, with the S.O.L.A.R plan, it works a little bit differently. Looks a lot more like an executive bonus. The employer is going to bonus that money to the employee right away. The employer realizes an immediate tax deduction for that. Now, because of that, the employee is going to have to pay taxes on that benefit. But the way ING works this, using their Global Plus IUL product, they allow the client or the policyholder to take a loan almost immediately, within 61 days of receiving that money. They can take a loan out of the policy in the amount of the taxes that are due. Now they've got the money to pay that income tax. So it's as if they're not paying any taxes, and of course the employer gets a deduction. So why is this important, and how these two stack up in a little more detail? Future tax uncertainty. With that non-qualified deferred comp, you know, we don't know what taxes are going to be in the future. We all know that the federal government is running large budget deficits right now, and you know, maybe income taxes are going to have to go up years down the road. Well, would you rather pay your income taxes today or pay them 10, 20 years down the road? A lot of folks are thinking that they would rather pay them today. They know what the rate is going to be. They don't know what it's going to be down the road. Exposure of the funding asset, boy, that could be a problem with non-qualified deferred comp. That money the employer set aside, it's actually subject to the creditors of that business. Also, the key employee may be sitting there wondering, well, is my employer going to be around down the road? What if the business goes under? What if the owner decides to sell and do something else? I have no guarantee that I'm going to get to that money. Something might happen. So by controlling the money in their own life insurance policy, it's not subject to the employer's creditors. There may also be potential tax penalties with the old-fashioned plans if the plan does not comply with Section 409A of the 2004 Jobs Creation Act. There may be some additional tax penalties there. The new S.O.L.A.R plan is not subject to that act at all. Also, you have no portability, no flexibility with non-qualified deferred comp. It's the beauty of the executive owning that policy. One interesting thing here too, these are typically looked at as retirement plans. Well, with the S.O.L.A.R plan, the employee does not have to take that money in retirement. They can take it earlier if they want to, if they need it for something, a child's college education, a new car, if they want to pay down their mortgage, you name it, they can take it early. And another potential pitfall with the old-fashioned plans, they're very complex. They may require a third-party administrator to run these, and TPAs come at a cost. They don't work for free. With the S.O.L.A.R plan, it's very simple. There are no additional fees to keep this thing running. The employer just needs to keep bonusing the employee for this. And again, you want to use the only plan they allow is that Global Plus product. And they have a special loan. They call it a select loan that they use in there, and the employee can take that out within 61 days to receive the money. Now, they don't have to do that, by the way. They can choose to pay that tax if they would like. But the 6% that they charge on the loan is a lot lower than any income tax bracket that a person is in right now. So that's the S.O.L.A.R plan, new take on non-qualified deferred comp. And the third part of this webinar, I'm going to speak about the retirement plans from American National. A lot of folks don't know about their expertise and that they're really experts in this area. I can get the conversation started. Well, simply ask the question, have you heard about the new types of retirement plans available to business owners? Most people won't know what in the world you're talking about. Ask them what type of plan they have right now. Maybe it's a 401k, maybe it's a SEP, maybe it's a stock redemption plan. When was the last time you reviewed that plan? Chances are they haven't reviewed it. Laws have changed, their business has changed. There might be something better out there for that owner right now. And did you know that any business can have any type of plan? They might think because they're a small business, medium-sized business, have a small number of employees, that maybe they can't have a 401k, maybe they can't have a pension plan. Any business can have any kind of plan. So how do you get from this point to actually formulating a plan? Well, ask the employer if they would like a free look. If they don't have a current plan, collect a census from them. And American National doesn't charge to put these plans together and to put a presentation together for you. If they already have a plan in place, offer them a free review. Again, there's no charge for this. All you have to do is collect a census, let American National do the rest. I forgot to put this in the PowerPoints here, but their website to go to find the census information is www.img.anicoweb.com. And click on pension plans. They've got a census form. You get that to us here at Financial Brokerage, or that would be preferable. We can get it back to American National for you, and they'll put all this together. You don't have to be an expert in this area at all. And American National has reminded me a while back that there are really only two things business owners are going to want to know, and that's what is this going to cost, how much is his or hers, how much are they going to receive. And let's see here. Looks like we have the same slide in twice, in case you didn't catch it the first time. And eventually I'm going to recap everything here. I'm not going to recap everything. This is why I put notes in here, because I might forget something here. Reasons you might want to put a pension plan in place or a retirement plan in place is that pension plans can include life insurance. Roughly half of the money going in can be put into a large life insurance policy. And in the case of pension plans, larger premiums are better. They try very hard to make those premiums as high as possible. Everything in there is guaranteed. You need a guaranteed interest rate to make this thing work on the back end. They also do work with 401k plans. If you have a broker-dealer, I'm not sure how they work with that, but if you don't, they do work with non-registered 401ks. A person without a securities license can't actually sell one of these. The client may have one in place already. You can roll it over. If they don't, you can get one started. Of course, this can also lead to ancillary business. I remember one producer that we work with here did a lot of prospecting with business owners. He started off with life insurance, but his main goal was to work with them with their retirement plans, maybe get their health insurance in place. One piece of business usually leads to others. And don't forget about referrals. This owner, once you've helped him or her out, may know of similar businesses in town. Their suppliers, their customers may run their own practice. Of course, their accountant and attorney are great sources of referrals to other businesses. And now we're ready to recap. We spoke early on about the tools that are available to help value a business. We've got the tool through iPipeline, also spardata.com for those that are contracted with Transamerica. If you're not, I can certainly get you the paperwork. Discuss the S.O.L.A.R plan, an alternative to non-qualified deferred comp. It takes taxation really out of the equation there. And then American National's retirement plan expertise, all you have to do is get them a census. They can do the rest. And before you know it, you're going to have clients writing large checks for life insurance. And keep in mind, if you have any questions, you can type them in the box on the screen. I don't see any at the moment. If they pop up here, though, I'll do my best to answer them. Next month, You can look forward to a webinar first Wednesday of the month again. And I'll be discussing living benefits. These are extra benefits, extra add-ons to life insurance policies our carriers offer. We'll discuss what they do, why people are interested, who offers them. I think in light of people cutting back on health insurance and maybe other benefits with their employers, these are becoming more and more popular. They're not getting them where they used to, whether it's critical illness or disability insurance coverage. So we'll be covering that in the month of December. And we have a question here about recapping the iPipeline offer. And I tell you what, I'm going to go ahead and scroll back here if I can and get to that. Basically, we have a business valuation tool that's available on our website, fb-inc.com. And I'm going to get to the screenshot here. This would be useful if this is something you want to do yourself, or if you want to use it as a starting point with an employer who might be reluctant to have a formal valuation completed. You can walk through this yourself. Again, it's not a it'd be a nice printed valuation. Hopefully, it will lead them to have one done by someone who does this for a living. But fb-inc.com, here's our screen. I've got the red arrow pointing to the quotes button. That's the first place you want to go to. Another arrow pointing to term quotes. That will take you to our iPipeline engine. And we may still be the only brokerage out there offering this business valuation tool, but it's up there at the top. It's in that orange bar. And all you have to do is click where the arrow is pointing to, and it will take you right here to the iValuate screen. And that's where you would start walking a client through that. So I don't see any other questions here. Hopefully that works for everybody. Again, thank you all for joining. I sure appreciate your time this morning, and look forward to seeing you all next month when we speak about living benefits. Have a great day.